Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Welcome back from the holidays. Alex, I haven't seen you in such a long time. How are you doing, man? Oh, man, how you guys doing? Okay, well, we got some interesting movement over the holidays, actually. Well, I don't know. Is interesting the wrong word? Ow, you know what? I don't know if... Okay, we're good. We're good. Ninja Trader's kind of giving me some grief here a little bit. Okay, so let's start out with the treasuries here. Well, you can't really tell from the 10-year chart. Maybe, well, yields are increasing here, man. the 10-year is sitting at 1.83. I saw the ATV. Oh, I have not seen that. What is it? Oh, we're going to see. We'll see here in a second. Let's just go through this really quick. Equities not reacting so well to the rising interest rates. And I must say, earnings so far, mostly just the banks, but, you know, Goldman Sachs this morning, not so good. My portfolio is probably reeling. I don't know if I should even go and look at it today. I'm gonna have to go and look at it because oil, look at oil, just plowing through up into the 85 at last, hitting our price target. And now Goldman is saying $100 a barrel. So this thing just keeps chugging. Natural gas. Okay, natural gas is okay. It sounds like that the US is concerned about this natural gas and is doing everything to make sure the energy prices in Europe stay steady. Here, gold and silver taking it on the nose again today with the interest rates up super high and some of our other instruments not showing. Ninja Trader is like choking on something. I don't know what it is, but one of the instruments isn't running very well. So let's come back over here and try and restart it. We're gonna have to put her out of her misery here. And good morning, Big Toasty. Okay. Activision fires more employees over sexual misconduct. Wow. Hold on. I've decided that I am just wildly allergic to dust or something because my eyes they just water all the time. Okay, Ninja Trader and task. Ouch. Not enough quote data is available to process this demand. Okay. Some 37 people have exited Activision Blizzard and 44 have been disciplined in response to allegations of sexual harassment and misconduct at the company. Well, that is pretty crazy. But Bobby Kotick is still there. Chief Executive Officer Bobby Kotick held back a report summarizing the actions that was due to be released before the winter holidays, telling people it would make the company's problem appear bigger than was known, the newspapers. Oh, wow. Wait, where was this? Oh, the Wall Street Journal. Well, too bad we don't subscribe to them. Okay. Jeez. So is that what you were talking about? No, you got something else. It's an acquisition. Activision shareholders threaten to divest if demands aren't met. Yeah, that's the same group of people have been saying stuff. I feel for you guys, but acquisition by who? I do not see that. I see the stuff about Zynga and Activision Blizzard. Or no, Zynga being bought by Take-Two Interactive by Microsoft? No. There's no way. I don't know if that would even be allowed. I don't know. Okay, this is an interesting one. Here, let's see if we search ATVI and Microsoft. Okay, here I got some ooh, okay. No, you're right. Bloomberg is saying here Microsoft is nearing a deal to buy Activision Blizzard, the video game maker behind the Call of Duty franchise, in what would be the US technology giant's largest ever takeover. People with knowledge of the matter said, Bloomberg News reports. What? Oh my, what? Oh man. Oh, I can't even process this, dude. Oh, thank you for pointing that one out. It's on CNBC too. Let's see if the CNBC has more details. Would that even be allowed? Oh yeah. Oh man, Activision shares soar 37% on report Microsoft will buy the video game giant. Well, I tell you, first thing is Bobby's gone. They're gonna get rid of him, right? No way they're gonna keep Bobby around. In fact, that's probably part of the benefit is it gives Bobby an out, right? Man. Is that even allowed? Like Microsoft owns so much gaming stuff now. That would be such an insane a behemoth. I have to say, well, I don't know. Like, what will gamers think about this? Because Microsoft hasn't been too bad as of late. As of late, like we must admit, since who's the name of the CEO over there at Microsoft, and since Bill Gates has left and everything, Microsoft hasn't been so bad. They've been doing a lot of good things. Azure is going along quite nicely, even though the last version of Windows sucked. They've been doing some good things with Windows, and they haven't been quite so evil as they maybe were in the past. But I don't think anybody trusts them. So tired, but stumbles into the chat nevertheless. Keller, what did you not did you not get to bed on time last night? Okay, it's like it doesn't like gold or something. My Ninja Trader seems to be choking on gold. Nadella, that's his name. You're right. Yep. I don't know too well. Oh man. Oh, what the hell is with Ninja Trader today? This is really frustrating. He got further. So the thing that irks me about this is that when I try and kill it, then it says, "Oh, hey, not enough quote data to process this request." Yada 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 yada. Maybe it's trying to request too much stuff all at once. Ninja. I went to a college that hated Microsoft, but I always liked them. Well, I was so when I was in school, I think it was Halo 2 came out, or maybe it was Halo 3. I don't remember. This was like 2007 maybe. And we were running a student game developers association, which I don't know how I was able to do that, but nobody was doing it. I set it up and so the PR people, every one of these companies has a PR on campus. I you don't even know, like Sony, Microsoft, they all had campus representatives. And so Microsoft basically threw us a launch party. It was totally awesome. They're good. Set Ninja. I'm not quite sure what it's doing here. It seems to me that it like doesn't like trying to load all this stuff all at once for some reason today. Full reinstall could be, or it could just be time to like delete the cache. Sometimes that helps. All of these applications try and cache data that they really should put more effort into settings that allow you to control how they retain data, so that like the one instrument, it will keep like all data forever. And okay, so I did miss some news here, hold on. New York Fed manufacturing, the forecast was 25, but we got a negative spot 7. Okay, well now that we've got everything fixed, it looks like that restart did it. Oh boy. How big of an out? Oh, that is a huge outlier. Oh man. Okay, so I'm just going to show you the time series here. So it's been pretty positive here. And now this is the first contraction that we have had since June of 2020. It is a pretty big miss. I mean, it's not like the biggest miss we've ever had necessarily, but for it to miss and be a contraction is not good. Oh yeah, well, I will regularly go and clean up the NinjaTrader cache, and it will be like 10 gigabytes of stuff. Totally, yeah, it's insane, right? Man, okay, so that news, interesting. So the treasuries have not really reacted to that, but gold has. This is concerning to me. This is the second piece of news we've seen like this. This is just like with the retail sales. When the retail sales missed, right? Treasury yields didn't really go that far. They kind of started to decline, and then Jamie Dimon opened up his mouth, remember, on Friday, and then things got even harder. Pretty big contraction. I thought you were having. Well, I am having a baby, actually. I haven't said anything about it. We'll talk about it. I'll make a more formal announcement like when it's about to happen, but we are going to have a baby again. It was not like we weren't planning on it, but we weren't necessarily doing anything to stop it. And we just ended up having a second one. So we're going to have another, and it's going to be a boy. Yeah, so we're going to have a boy. We're also going to have a puppy. Have I shown you guys the puppy pictures? Oh my gosh, I've got these pictures. They're so good. Okay, wait. Let me. I'll just pull them out of the DM that I sent to my wife with them. Look at this puppy. He's maybe getting a little bit of brown coming in now. Right now he's black, but apparently he's going to be more brown. Congrats! Thank you. I'm glad to know. I'm more interested in talking about the puppy than the baby. Wait, when is the baby going to come? I think that the baby is going to come in like July, if I recall correctly. So that's a ways out. But in the meantime, we're getting a puppy. We're getting a puppy. He is 3 weeks old. He is 3 weeks old. Yes, it's a Papillon. It's a Papillon. So they don't get very big. Oh my gosh, they're so cute. We are soliciting dog names. Dog names. Yep, must just be born. Yep. He's only 2-3 weeks. He was born like the last week of December. And oh my gosh, he's got like, here, let me get the other one. He's got the cutest little mark on his forehead. Look at this guy. He's a looker. Huh? Isn't that a good looking puppy? The baby will grow up with the puppy. Yeah, exactly. Well, and Asher will grow up with so Asher, who is gonna be 2 in a few weeks, has decided that he likes picking up the dog. So we had to put one dog down, and the other one is really old and is gonna be going soon. But he seems to be able to handle being picked up by Asher right now, and Asher is relatively well, I mean, he's trying to be gentle at least. But he'll like pick him up and then put him on the couch. And the dog doesn't like it, but he just kind of puts up with it. So I'm hoping that by the time we get this, because this guy, these are a little fragile dog, Asher could hurt him. But yeah. I'm super excited. So and it should be good. We've been lucky the start of the year, because it used to be that my wife we would basically be working, Fridays and Saturdays, and it was really hard to record any content, right? But because she's been doing stand-ups where she'll fly in the evening, sleep for a few hours, and then fly back for like the red eye flights. And that's been giving us a lot more time. Like the video that we're putting out today, which is where we're going to talk about order flow conditions. So this is a really important one, and we're going to talk about the 3 different types of trends to kind of help you judge the order flow conditions. I spent so much time on that video, like writing it and editing it and making the thumbnail and everything. I probably spent way more time making the thumbnail than I should have. It was like all morning yesterday taking a picture and trying to get the picture right and stuff. But like we've been able to do that. So for the next video, which is going to be where we're going to talk about, and it's going to be more of a summary, but we're going to talk about the square root law of meta order impact and the inverse square law and liquidity holes and a couple of other properties of markets. Really important video, right? And then from there, I think what I want to do is I want to see what you guys say, like what interests you, and dig into one of those a little deeper. And then we're going to have the inelastic markets video, which I want that video to be like the most watched video we get. Well, it does look like the yields are now coming along. So, how much do I care about this New York manufacturing index? I don't know. The conditions that we're getting here in the market, in the treasury, are not too exciting. It sure does look like, well, there it's going there. Sure looks like that they have some room that they could move up though. But then when we have the baby, I'll be able to take paternity leave. And of course she'll be home more. And so we should be able to make a lot of content this year, which will be good, because after that, once the second baby starts walking, then it's going to be really hard to do stuff. But my plan is at that point, hopefully there is we've got all of our kind of keystone content created for you guys, and we'll be able to focus more on creating content during the week about breaking headlines. Like this Activision Blizzard thing would be a good thing to talk about. So let's see what Reddit is saying about the Activision Blizzard thing after that big long blah 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 blah. And I just probably totally bored your guys' ears off. All right. Oh man, we lost a few people there off of the at 640. Wonder what happened there. Was the stream is the stream doing okay? Hey Salim, how you doing? Hmm. Oh, just kind of okay. We might get some movement here, Salim. We've kind of got some stuff turning around. Okay, so the treasuries did push those highs, but they're already backing off. Hmm. So this is a situation where the news kind of suggests to me that yields could really come back, and the conditions that we're getting and the order flow that we're getting off of it is very, very lackluster. Gold took a good swing there, but even now that's kind of just so. I'm wondering if the market thinks that even though we're entering into a slowdown, that the Federal Reserve is still going to raise rates. I'm a little concerned that that might be what's going on. Is they think that the Fed is going to raise rates in March no matter what. I'm still of the opinion, although the market very much disagrees with me, but I'm still of the opinion that there's still some question as to whether they will raise in March or whether they will start raising in June. Given some of these economic numbers, I think that it makes a lot of sense to maybe wait to get the quantitative easing stuff out of the way, because that's what was really juicing markets, right? And then maybe you raise the rates in June. But we may get some more stuff. Probably part of this is just people coming back from the holiday and trying to get their bearings, and they're probably like me, sitting here being like, oh, like even though it's moving, I don't know if I really want to take on like hard risk right now, right? Okay. Past hour. Wow. Already 386 comments in r/gaming. What about an r/technology maybe? Nope. Okay. We're going with the r/games thread. I do kind of wonder, is that a big enough acquisition that there could be antitrust concerns about it? Okay, it is official from Xbox. Excuse me, bro. This has to be one of the craziest things to have happened in recent gaming history for all those wanting leadership to change in Activision. I hope this will grant that wish, and I hope this means we get Blizzard's IPs into better hands at this point. Yeah, right. Oh, yeah. We haven't even. Oh, man. I forgot that Microsoft owns Bethesda. Oh, my God. Can you believe it? So does that means that you could get a Doom game, a Quake game made by Blizzard? That's the. Really? You get suggested your videos more than mine? Oh, very good. Well, I think that our new thumbnail for the stream is doing better. I think that it is I don't know if it's necessarily like reaching more people per se, as much as it is that the people that we're looking for are seeing and going, "Oh, this guy is doing dom trading. I want to go and talk to him." So, I'm good. And we'll see how well, I don't know, just having the better camera and some better editing software. I don't know if it makes a huge difference, if it'll make a huge difference on the click rate, but maybe. I think that a lot of what is going forward is going to be like, what we put in the thumbnail is going to be important. So like this video that's coming out today, um I put 3 kinds of trends, right? Um and because it's such a short phrase, um it really stands out. So I think that this next thumbnail should perform differently. We'll see what happens. But it seems like that I'm feeling good about some of the changes that we made last week. That's good. Okay, so they are now pushing past the 8.25, and the 5. It's actually interesting. The oh, oh, what happened there? Hmm, that's not right. What if I put orders on this? Yeah. Well, that's interesting. It is not letting me place orders. So if I do NT Sim here, wait, is that 2 year? Yeah. Wait, but then if I come over to Sirius, then it lets me put in. That's not good. That's not good. Hmm. Okay, I'm gonna try something real quick. Oh. Hmm. Okay. This is getting a little weird, really weird, right? Okay, we're gonna shut this down for a second. Okay. It does say that we didn't take one in the 10 year though, so it looks like the bridge is now working correctly. Anyone see that massive sell in the early hours in the UK time on the E-mini? Well, the E-mini does definitely not reacted very well to the rise in interest rates. Which camera do you have? Well, my old camera was a Canon T6i, and the new camera is a Sony A7 IV. So, Still no. Free stocks. Well, 1 minute stock scanner. I'm not so sure. Financial Viz isn't that has a scanner, but I don't know if that does like on 1 minute charts. Oh, hey, now it works. Okay, hold up. We're in the 2 year. Says I have a pending order. Oh. Oh, this is no good. Guys, a little concerned here. So when I come over into NinjaTrader, it doesn't show an order. But when I come over into my see this one, it says pending. Says I've got a pending order at 1.827. Well, maybe that one's gonna get filled. I don't know. Wait, what is this one right here? Local? Yeah, no, that says that's like a real order. But it's NinjaTrader doesn't show that there's an order. What's with that? Best time to trade the E-minis. It does seem like you can get some moves out off of the that's what Bots was doing, is he was just trading the E-mini off of the London session, and that's how he was doing. Well, those yields are coming back quite a bit here. I don't know, man. It does seem. Let's just pull this back over here. See, like that would have gotten filled if it was. Okay. Well, oh, and if I put one up here and I say cancel all. Okay, well. So what's happening is NinjaTrader is not processing them being canceled. Well, are they even being sent to NinjaTrader though? I don't think that they are. Oh wait, working. Okay. Okay. There was just a filter. Yeah, it was filtering only active orders. And now I can see that I did put some orders in the 10-year, but they've all been canceled. But NinjaTrader still shows them as pending. So I think that we're okay to trade it, but there was that update that they made to fix anti-coded validation. What do you mean by that? So NinjaTrader made a change to try and fix an issue with partial fills, and it kind of looks like that they broke something else. Let's see if anybody else is dealing with this issue. Well, now this is very interesting also that the yields are coming back so hard. I don't know what. Okay, let's go to Twitter here. My mind is just all over the place today, isn't it? Hmm. Look at that. There's a pretty strong sell flow there. This is really curious. Hmm. So there was definitely some weird flows there. I can see that the 10 year seems to be lagging here. The 30 year really seems to be the one pushing, and so we're getting a steepening curve. There was some all sorts of noise from the market makers there in that area though. But in the meantime, the equities kind of look like they're on a good run there. I don't know, man. We got a real puzzle going on here. Well, I guess one thing that we got going on is that the equities, you know, we come to the chart here. The equities had a pretty decent sell here, right? In the overnight. So that might be one factor here is that they may want to try and fill that gap, which is a pretty big gap to fill if that's what they're going to do, right? It's a pretty big gap to fill if that's what they're going to do. Well, let's just come back over here. What about the dollar? Dollar looking strong this morning. Not really moving huge at the moment, though. Bitcoin kind of looking a little sad too. Keep my eye on that. Gold seems to be continuing its move up, and oil is coming back here a little bit. Yeah, the treasuries were giving us a little bit of a reprieve, but now they're getting slammed again. The Babylon Bee tweets Democrats warn that American people may tamper with next election. Okay. ECB bond holdings under PEPP 1.6 trillion as of last week. It could be the taper. Yeah. It could, one thing that we could be seeing is with the taper. Um, i- maybe the taper is a really strong flow, and the other fundamentals in the treasuries don't really matter as much because of that. So I mean, they've been getting hammered, right? The interest rates have just been getting hammered today. You can kind of come over here and see now. Oh, there's some flattening in the 30-year end of the curve. Hmm. So that's another thing, is that it seems to me. Oh, by the way, are we getting movement in the 6J? Yes, we are. Okay. Oil is just all over the place this morning. They were all the way up at 85, 3/4. Now they're just failing 85 a little bit. Hmm. Alligator's responding to me about how the rates market seems to be ignoring the numbers. And he says, yes, since Friday, we can really feel the market's weakness. I think he's referring to the treasury market's weakness. It's because JP Morgan is short. That's why. Hmm. Well, we're getting the first sign of maybe some support there in the 10-year. Let's see. Okay. There they took 22, 3,000 contracts. Nobody hitting into 21.5 yet. It ticks back up. Not many willing to bid there, though. Oh, man. Oh, man. That doesn't look so good, guys. Yeah. Well, I'm not seeing anybody hit into 21.5, but the buyers at 22 just look pathetic. It just looks pathetic. Now a few hitting into 21.5. Let's come back to Reddit here a little bit. I think I need to focus on something else for a second because I'm getting hyper focused and I'm going to want to take a bunch of trades. And I should probably let it sort itself out for about 5 minutes. This is the biggest deal in like any industry ever. Disney bought Marvel for $4 billion, and this is a $70 billion deal. Whoa, really? What's wrong with the Canon camera? So there's not anything necessarily wrong with the Canon camera. But it was not fitting my needs very well, and there was two reasons. One was that it was only doing 1080p. So you notice in my last two most recent videos, so the one today and the one that was 2 weeks ago, I will zoom in on my face. And I can do that now because of the new camera, because I can record in 4K. So that's the first big thing. And then the other big one is that what is the autofocus. The autofocus on the T6i is just not very good. So it was very difficult for me to record anything on my own because I couldn't focus. I couldn't get it to do what I wanted. And now, I mean, it's still hard because I have to position myself and everything, but basically I got the camera in a really good position and I just leave it there. And that seems to work just great. So the T6, or sorry, the new camera has definitely like improved my workflow. It's also a way better for streaming. I mean, we're using this one right now, right? And the color and everything else on it is just really great, right? The skin tones on it are perfect, always perfect. And it handles like low light conditions really well. So, I guess it was mostly like part of it was that that camera was coming out and I wanted to invest in the stream, and it's good for me to use the money that I've saved up so that you don't get taxed on it, so we can write it off, right? Juan, hey, thank you so much. I'm glad that you stopped by. What was the first video that the algorithm recommended to you that reeled you in? And there's still some selling pressure. I mean, 22 is bid again, but I am seeing buyers are picking up a lot of inventory here, though. Buyers do seem to be picking up a lot of inventory here. Oh, okay. So there's a little bit of trade going on here. Low light, true. Well, it's not even necessarily a Canon versus Sony thing. If I had gotten a Canon, what's the equivalent? Canon R6 or R1 or something like that, I probably would be just as happy, right? But as long as it was a full frame camera, right? Having a full frame sensor, that was kind of the big differentiator for me. I think it was the one about the Dom and the oh, okay, very good. So the order flow videos, that's good. So that's been our focus. So my understanding is it used to be that the Canons were better at color, and that the Sonys sucked with it. But Seth, just trading imbalances, is it a good or bad idea? Well, so when you're talking about imbalances, one of the things, maybe this will help. One of the things I was for this next video that I'm making, I was reviewing the information in our favorite book, Trades, Quotes, and Prices, Markets Under the Microscope. And I was getting into the part of the book where they were talking about autocorrelation. So one of the most like heavily studied or shown market properties is that there's strong autocorrelation in order flows. So if you see a buy order, then you are 0.5% more likely to see another buy order 10,000 lots from now or something like that. And there's also really strong auto clustering stuff, right? Like when you see volume, you're likely to see more volume, and there'll be like a period of, like the activity kind of clusters, right? And so when you see this with the major theory and the technical analysis kind of take on this would be, this is herding behavior. People are seeing other people trade, so they want to trade. People are seeing other people buy, so they think maybe there's a big buyer in the market, and so they want to buy as well, right? And so for clustering, they went and they started to try and model this clustering behavior. And they've been using Hawk's processes, is kind of a generalized Hawk's process seems to be the best match right now. And it seems to match the empirical evidence quite well, right? So it does appear that order clustering is due to like that herding behavior. So then they went and they tried to look at, okay, does that explanation work for autocorrelation as well? And it did not. It did not. Like the models didn't match up to be able to explain why we see so much autocorrelation. But the thing that got weird about it is that the market makers account for that autocorrelation really, really well. So even though you might be able to really strongly predict the orders that are going to be able to come in, you might not necessarily be able to predict price because of the way that the market makers account for it. So it's really, really weird sort of a thing. But when they started looking at it, they said, well, our other theory for autocorrelation is that there are large players out there that are buying or selling, and they end up buying or selling a lot. And so the theory was that autocorrelation is created by large meta orders, right? And when they made a bunch of models to try and explain it using large meta orders, those matched up with what we see in the market much more closely. So the prevailing theory among market microstructure researchers is that autocorrelation is caused by large meta orders. Okay. So when it comes to like trading imbalances, I think that that's kind of where I would think about it, is that the place where I think that we can have an edge is by trying to front run large meta orders as a retail trader. But you got to remember that just seeing like an imbalance in the book in and of itself might not necessarily tell you that, right? Because the book is really good at compensating for it. So I think that you probably have to have a more nuanced approach than that. Well, man, I thought I could hang on through that, but that was just a disaster, man. The treasuries are just getting absolutely creamed here. Did I miss something? Hold on. I feel like I'm missing something. I'm trying to code the footprint candles to place orders when there are 3 or more imbalances. Oh, okay. So you're talking about imbalances in market orders. Well, I have found that when you get a running imbalance of a certain amount, that it does tend to predict a short-term reversal for sure. But I think that the problem with that is that it seems to have a really fat tail. Like it works most of the time, but then anytime there's any kind of a trend, it will just lose over and over and over again. Microsoft's 68.7 billion cash offer for Activision Blizzard could be, if completed, the biggest all-cash acquisition on record in the US and third or fourth biggest globally. Hmm. Yes, fat tail can't be avoided. Yeah, it's a property of markets that you've got to factor in. Is that markets tend to follow power law rules. So I'll tell you something else I was reading. So I've been trying to read Taleb stuff. It seems to me that Taleb stuff is much more. I mean, he does options, and so I think that what he's talking about is much more geared towards options. And you know what? Given markets, the way that markets behave, and everything else, I think that playing options is probably is going to be the most likely profitable way to trade. Is just you have to have a pretty big bank account to begin with to be able to pull these sorts of trades off, right? Um, but one of the things that he was talking about was that f of x matters more than x. So x is the stock or the instrument or whatever, and you might not be able to control where x goes, and it might be very difficult for you to predict what x is going to do. But f of x is like your strategy. It's like the options strategy that you put on, and how much you profit based off of x is the function f you know on x, right? So he was saying it's better to study f of x, and because you can control that. But it, it's very much specific to options, isn't it? Because here, when we're scalping, you don't really get a whole lot of control on f of x, right? The most you can do on f of x is cap off losses, right? You can have a stop. And otherwise, it's just you're going to make money linear, or make or lose money linearly with how X changes when you're scalping, right? I hate the time decay in options. Yeah. Free historical data for futures? Not that I know of. But what I would do is just go and get go and start an account. I think you can start accounts now for like $400 now, and it is $50 a month, but futures is much easier for scalpers. Well, and but that's the key thing is that I don't see any way around that. You have to be able to predict price to some extent to be able to make money in scalping futures. You either have to predict what it's going to do, or you have to take on risk, a lot of risk. And the taking on risk strategy makes you extremely vulnerable to the fat tails. Okay, so we are getting a little reprieve here. Play around with them a little bit here. 50-50 predict and take risk. Yeah. I suspect though, like one of the key ways that retail traders will tend to take risk is they'll look at what the ranges are, and then they'll try and make their stop outside of the range, right? So that's something that should overall work, right? If it stays within that range, but it has very fat tails. But I kind of suspect that because these things do tend to follow a power law, that like looking at what the median and standard deviation ranges are is probably a gross misestimation of it. So if you really wanted to take on risk in ES, I think that you need to have a larger stop than 12 ticks, right? I think that if you take a stop that's 12 ticks, you're still likely to just it is just going to be random your results. Well, it depends on the ratio. Well, let's just say that it's 2 to 1, right? Let's just say that you were going to take um let's say you were going to take um well 12 is probably, let's say that you were going to take 20 ticks of risk to make 10 ticks, right? That would be kind of like a reasonable scalp that a lot of e-mini people would do, right? Because the average range is 12 to 16 ticks, or the mode range is 12 to 16 ticks. And I'm saying I think that 12 to 16 is too small. I think that if you do 12 to 16, that your results are going to be mostly random, and that if you're trying to like, you know, uh, take advantage of the noise, that you probably want a larger stop than that. But I think it's also there's the way that the E-mini moves is just kind of, you know what I mean? It, the trends that you get in ES are just so crazy. But I just don't know any way around it that, no matter where you put your stop and your target and everything, if you assume that the price, underlying price, is a random walk that follows a power law, then it doesn't matter where your stops and your targets are. You're always going to come out lose money or break even. And if you have large stops, all that does is it will give you runs, but overall in the long run you lose money. And I think that's what most retail traders do. Well, this is definitely turning around there, right? It's coming back so fast. I really wanted 85, but yeah. Okay, so this is an important thing we should know. Not as bad as year-over-year drops seen by the other banks, but take a look at equities at 2.12 billion that was down 11%. Um, says an analyst on Goldman Sachs. The banks saying they're challenging market making conditions. A big reason why you're seeing Goldman Sachs sell off. Oh man, I should have taken it at 45. Damn. Well, this day is proving to be challenging. Kind of looks like ES is unhappy here. We're going to start here in a little bit. So that's quite a bit of movement in rates, considering that the ES hasn't opened yet. It's kind of an unusual time. Hmm. Yes. Let's see here. We only took 2 there, right? Oh, we need to get rid of that. There we go. Okay. Yeah, no, we're okay. Well, there's still some pretty strong sell flows out there, so we might get some better prices if we still want to go short rates. Welcome to the new market going forth. Could be. They say it's difficult market making conditions in the fourth quarter. That is a little concerning to me because I don't think that it's necessarily going to get better. Like before, I was really concerned that we were going to run into like a low volatility regime sort of a mode, and that can be beneficial to a bank, right? But instead, with this slowdown that we're having at the beginning of the year and the way that markets are reacting to interest rates rising, it's probably going to continue being difficult for stocks, right? Most of the comments here on the Microsoft thing are just people like, "Wow, it's so big." Yeah. As much as Activision desperately needs reform, this does not sit right with me at all. This feels so much like the media consolidation going on, where a lot of media is controlled by fewer and fewer mega corporations, and this worries me a lot. That's exactly what I'm thinking. Is like the gaming market is consolidating, and Microsoft is becoming the largest player, far and away the largest player. What I meant was it's going to be choppy markets for a long time. Well, that's what I was saying. This is like back in like August, I was saying this volatility could come down and get right. But once Omicron kind of came into the Omicron has thrown a real wrench into things, right? Because the, and I think that the real key here is remember that the Federal Reserve has made the calculation that the threat from future coronavirus waves is an inflationary pressure, not a deflationary pressure, which is correct. And that throws a real wrench into things, right? Because if we get economic slowdown from Omicron, which it appears like we are, and that ends up being an inflationary pressure, then you get a situation where, equities come down and you still have to raise rates. And maybe that is why the treasury market is acting the way that it is. But big but I really think that people are underestimating. How do I say this? Do I say they're underestimating this or they're overestimating this? Um, I think that economists still think that the inflation is being caused by temporary supply chain constraints, and I don't think that that's entirely correct. Okay, um, the reason that we're having the supply chain problems is because we literally bought like 20% more stuff. Like the government juiced the markets by giving consumers an unprecedented amount of stimulus. Like it wasn't just like, oh, we gave them like a one-time check. That like they did it 3 times and then they gave you like the child tax credit every month. Okay. That consumers were spending more because of that stimulus that they were given. And if they hadn't have been given that stimulus, I don't think that we would have been seeing the same supply constraints. In fact, if the government hadn't done anything, which would have been a bad thing, but if the government hadn't done anything, we would still be in like a deep depression, recession, whatever, right? So, I think that when that child tax credit rolls off this year, and you're not like directly buying bonds in the open market and everything like that, I think that that is going to have a much bigger impact on the inflation than you might think, right? And so this reading that the treasury market is making, where they're saying yes, the Federal Reserve is going to raise interest rates, well, they're going to have to back off before they get to where they want. I think is a really smart calculation. You get what I mean? But the other thing that I'm seeing though is that um, the economic weakness looks a lot stronger than I anticipated. Hmm. So let's see here. We are seeing some buying movement in the 5 year. So, oh, and they all ticked down. Let's just set it there. Wow. Okay. And then 2 ticks. What just happened there in ES? Woo. They getting a stop run there? Wee. Well, these buyers are pretty pushy, pretty aggressive. So I'm starting to feel the pressure of my heart. My heart is beating a little bit here. Um, Even though it's not like that crazy, but I bet you my stock portfolio is not going to look good today. I'm probably going to lose like $300 today. Shall we go and look? Oh, it's going to be so bad. I don't even want to look. It's going to be so bad, guys. Good morning, GT. How are you doing? 196. 196 is actually not that bad. Whew. Pretty bad, though. Look at that go. Oh, that's interesting. Hmm. Okay, I think I see what's going on here. Okay, so I'm getting I'm hearing over the squawk that Deutsche Bank's analyst was saying that they think that at one point the Federal Reserve will raise 50 basis points. Which I'm like, okay. That must have been why the interest rates were selling a little bit earlier. Why the treasuries were selling a little bit earlier. Are they down 8% now? Well, JP Morgan, after their results, they got sold hard, didn't they? I'm kind of on the fence as to whether that's a big concern or if it's just kind of a temporary setback for the banks that will probably continue to make money from rising rates.
Block cell.
Do you see that? So that's what's going on here. If it's that if the selling flows was coming from that Deutsche Bank analyst, well, so like last week, it could be a case of we continue to get those flows and it just watching these analysts stuff come out and like Jamie Dimon for instance too is just really bizarre to me because it's like everybody was so behind last year, saying oh the Fed's never going to raise rates, and now they're all like trying to outdo themselves on how aggressively the Fed is going to raise. You're tempted to buy a bit of GS at that price? Well, I'm going to stick with it. I own a decent amount. Is Dwack doing something today? Dwack has been on the rise, but last time you guys mentioned it was I was up like wasn't that good. Yep, there you go. Fed to raise rates by quicker than anticipated may hike 50 basis points at some point to get ahead of inflation. So I think that first move was probably because of the Deutsche Bank analyst. Uh, so now it's like the rest of the market is catching on. Well, it's not like a huge move, but it is right. It's going like right up into that resistance though. Dwack. It's been on a run as of late, although there doesn't appear to be any fundamental catalyst for it. Well, I tell you what, if the Federal Reserve were to raise interest rates 50 basis points at one point, that would certainly be a huge deal. And that would be like a really big change from any kind of market expectations out there. I feel like this particular prognostication is a little wild because I'm still looking at it like, yeah, maybe they raise in March, maybe they don't. Maybe they raise like 2 or 3 times and then they have to back off, like that's what I'm thinking. And and then over here we got Deutsche Bank. Oh yeah, they're gonna have to raise it by 50 basis points and all of these sorts of things. Like, are they really seeing the inflation pressures continue through here that strongly? Yeah, but so here's my twofold concern with Dweck. I think you were here the other day when I said this before, right? My first problem is that they picked a CEO and I don't see why they chose Devin Nunes. There doesn't seem to be anything about him that suggests that he would be a good CEO or that he knows anything about social media. But the number two problem is that they are going to launch their social network, and that will probably get that's going to be some excitement going into the move, but um probably as soon as it comes out, it's just going to get slammed. you know like it just like when it came out, people went and found that they were using they had some what was it, I forget the name of the software, but they had already had some internal networks that people were able to snoop out that was using an open source Twitter clone as the basis of their platform. And you know if they release something like that, if it comes down to it and they release something like that, they're going to get slammed so hard. Like, they got one chance to make a splash when they release, and if it's bad. Another problem that I have is that they're saying that they're going to become a video streaming platform and all of this other stuff, but they're not. They're making moves to have that done by other people instead right now, like, which doesn't seem to be in line with their real strategy. So I kind of feel like that this is kind of like they're just throwing shit at the wall to see what sticks. I don't think that there's a well thought out plan involved here. Well, this action is kind of frustrating me a little bit. Like, I wouldn't mind being short rates again. Okay, well, Trump's base will follow him. So here's another thing that's going on that's kind of interesting. Well, two headlines. Number one was I actually saw a poll that was showing that DeSantis was gaining on Trump in like polls of Republican sentiment about who they would vote for in the primary. DeSantis is gaining on Trump. Meanwhile, the whisper is that Donald Trump is complaining about DeSantis not stepping aside. Like, DeSantis has refused to say that he won't run against Trump, and Trump is apparently upset about that. So, but can you imagine if Donald Trump did run again and he lost the primary, how big of a hit that would be to his brand? You know? This is why I'm just like, this is why I say it doesn't seem to me like there's any kind of overarching strategy here. They're just throwing stuff at the wall to see what sticks. Because If you were really, being strategic about this, then what you would do is you would say, I'm not going to run for president again. I'm going to run this social media company. But as it stands right now, it's like it's not even clear if he has any hand in it at all. He's giving other people the positions, and he's putting his name on it, but how directly involved is Trump in it? You know? So, and because we don't really know why DWAC is moving the way that it is, I kind of, yeah, I mean, I'm really interested in the stock. I really am. And I really do see the long range potential for it. But at the moment, I just can't. Maybe sometimes I'm just too risk averse, but I just can't get myself to jump in on that right now. Well, we did see some downside on the equities, but it wasn't terrible. We are seeing the 6J break out to the upside here. Pretty strong up candle there in the 6J, even though the treasuries aren't really following too strongly. Man, a real cluster of activity in the oil here below 85. So maybe there's something going on there. Somebody's probably picking up inventory and somebody's probably dumping it. Now, the cumulative delta in the S&P 500 is so negative this morning. It's a good 8,000 contracts short since we've started. You made money going short on Facebook? Good job. That one is that one was one where it was like, there was a lot of really big hedge funds invested in it, like Michael Burry was in it and everything, and I'm like, why? Everybody hates Facebook, dude. Why do you want to be in that? Okay. So going short it, that was a gutsy move and good job. Hmm. These treasuries are kind of being a little slippery here. We did see some large icebergs like down at the lows, but since then there's been a couple of ticks up and down that were really slippery. Forex Live says gold struggling to withstand market pressure. Hmm. One of the things is that for the Deutsche Bank, I was just thinking about gold there. Okay, so the Deutsche Bank analyst thinks that the Federal Reserve might raise interest rates 50 basis points all at once to try and get ahead of inflation. If things are really that dire, shouldn't gold be taking off right now? Shouldn't gold be taking off right now on the fear that the Federal Reserve isn't going to be able to keep up with inflation? Yeah, but it's it's just been chilling above. Well, like I mean, we're above 1800. That's good, but let's see here. You went 332 to 320. Well, it's not a huge. It's not a huge trade down. Look at that. Okay, so that one they just took 2 ticks there, but the yields didn't actually move that much. There we go. That's a little better. Oh boy. Oh, I forgot about that. Did you hear about the woman was pushed in front of a subway train in New York? It's this one is curious to me because I remember when I was in New York, and the first thing that a colleague told me when we were waiting for the train was, sit as far away from the train track as you can. Is what he said. And then he told stories about people getting pushed in front of trains. So like it's something that's happened before, right? Um, but like the media seems to really be picking up on it this time. It's kind of weird. Or at least Twitter is picking up on it. The people that I follow on Twitter are picking up on it. Eric Trump, there was a person tweeting about that. Okay, so I think that we're getting a little bit of spreading coming in here because the 5 year seems to really be pushing it, but these other two are kind of lagging. Like there, some buy volume come in, but the 10 year kind of almost resisted it. Well, that could easily change if the 30 year were to tick up, but wow. The proportion of S&P 500 members beating earnings expectations has risen over time. The long-term average since 2002 is 69%, but this number has been rising for years and is now almost 80%. The job of equity analysts is to get access to management, not to be right. Huh. That is so interesting. How can that be the case? Okay, so there is the uptick, but do you see the 30 year didn't go? Even though there's some iceberging going on in the 10 year. So there's definitely the spreading coming in here. I used to stand back from the tracks when I was in Chicago and people would face away from the tracks to keep an eye on the people behind. Yeah, right. So it's just like, I mean, I remember there was some stations where, the wall was pretty close. You couldn't really get away from it. Having an iceberg there and then ticking up, that's when I like to see. There you go. Okay, and then the 30 year came along. This is a 5 year continues to try and pull us. So here's a question for you. If we were to make a video about Activision Blizzard, I'm not saying I'm going to. I don't think I will. But if I was going to make one, what would I even say about it? Other than like good riddance to Bobby Kotick? I don't know. I wonder how Kathy is. Are you talking about Kathy Woods? Dude, that whole thing. Oh man. Obviously, I don't call everything exactly the way that things, like oil is a really good example here. I'm feeling really good about oil. I totally nailed that call up to 85, hit the price target, was totally right, but we didn't trade it very well, did we? Um, but I don't think I've ever seen a time in markets where there's been more like I told you so than this market of 2021, right? I just tell everybody, the first trade is usually the best trade, and now that GameStop has popped off and come back, you probably, I mean, you're still going to trade it, but it's never going to be as good as that first one, right? Whoever makes the most money in the previous year usually loses the next year, and Kathy Woods only made money because she was in Tesla. So yeah, of course she's going to get slaughtered. And then that one was just crazy because like the more we learned about what they were doing over there, the more it was like, what the heck? What the heck are these people thinking? There's no way that they're going to be able to get out of those positions. And when people start selling their shares in her ETF, she's going to have to sell those stocks and they're going to come down on you. But like nobody listened. I don't get it. Okay, so these treasuries sure are ticking around a lot, aren't they? The funny thing is she says what she's doing or is going to do, right? How does it affect the gaming industry if Microsoft takes gaming to cloud only / digital? I don't know if that would really affect the industry all that much because I feel like that the industry is already there. I haven't bought a physical game in forever. Remember CNQ? Ooh, very nice. What percent is that though? Probably for stocks, it's probably better to speak in terms of percents, right? So now that we've ticked down below 21.5, now we got the iceberg on the other side. There's a first super weird market, maybe perhaps being the first day of the week. Yeah. Well, I think they were getting some very conflicting flows coming into the treasuries, right? I think that there's a bunch of funds are probably trying to go short interest rates because of what the Deutsche Bank analyst said here. Oh, we're about to get some news here. What do we got coming? Oh, housing market index. Okay, expected reading 84. Actual 83. So not a huge still, but is slightly under expectation. Is the S&P 500 reacting to that news? I don't know. S&P 500 just looks all over the place, but maybe that's just because my eyes have been over here on the treasuries for so long, and those are usually slow, right? What? What a mess, guys. Oh, okay. So that was like a 7% move for them. Yes, I'm well aware that Goldman was under expectations. Yes, they got hammered today. I think I lost like $200 on them today. Most banks. Well, the thing that's interesting is like for JP Morgan, I think they actually beat on the top line estimates, right? It seems like that the banks are getting hammered more so because of the compensation thing, that the banks are having to pay more for their employees. I don't know. Okay, there's some big transactions coming through here in the 10-year. Both ways. Goldman has definitely missed in many, many times in the past. I can think of many times. This is probably the biggest move off of earnings that I've seen, but it's certainly not the only one where they've missed. And I've seen many times where they hit earnings and it was really good and they still sold off. And then, only to come back roaring higher later. So I don't know. Like earnings sometimes we can, if you're on the long-term horizon, right? Sometimes we can overthink the earnings, like what people have to do because of earnings in the short term is not really indicative of what's going to happen over the next month. But not in the past. No, it happened like I remember there was a couple like just before the pandemic, in fact. I noticed banks have been cutting hours again lately. Tried going to the bank in the past week, but most of the branches, well, that's a different kind of bank, right? That I'm seeing that everywhere. I see there's a bunch of restaurants out there that, yeah. They're just like we have staff shortages, and so we're just not going to be open during this time. I did buy the new camera. Can you tell? Here, the color on it is so nice, don't you think? But you'll see here, at the top of the hour, we get our next video coming up, and you'll see it's working really well for me. It's a lot easier for me to record because it autofocuses. In fact, I could get up and look at the chalkboard, for instance, it would still be focused on me. So it works really well. Well, what do you think I should be doing here with it? Should I just leave it alone now? Should I give up? I'm thinking about just giving up. Because that was 3 now. Well, there was 2 were scratched in between that, but now that's like 3 losers in the treasuries, and it never really going very favorable. Although those were sells. So I guess the call should be buy it there. Wow, that whole 800 pulled because I hit it. Okay. Uh, with the S&P 500 not in like outright panic, maybe they do try and make a play for like for the gap fill of some sort. Mhm. Quantitative tapering is going to lead to a big correction when markets finally wake up. That's where we see market heading. Well, what I kind of see happening is like, uh, for starters, the market does seem to have finally priced in the the quantitative tapering and that they're going to raise interest rates a couple of times this year. It was not like that a month ago, right? A month ago, we were like the only ones saying that was going to happen. I still get all of these people on my TikTok being like, imagine thinking the Federal Reserve is going to raise rates. It's just like, are you guys not seeing what's happening? Like, come on, right? And then, but now it's like the banks are trying to outdo themselves on how aggressive they think the Fed is going to be. Isn't that such a bizarre shift in sentiment? Don't you think? I'll tell you what, the 10-year isn't reacting as well here now. So is the market just kind of being irrational about it? Or is it really that bad? You know? That's what I'm trying to sort out today. Is it really that bad? Is inflation really that concerning that the Federal Reserve is going to have to raise that aggressively? Well, if we get more inflation from Omicron, then maybe it really could be the case. I don't know. It's a really, really disorienting for me for the market to switch that quickly, right? But if we really do go on that track, once yields hit about like 2.25, then you really could start to see some real carnage. Yeah. 2% raise was 7. Yes, but are you gonna really actually gonna see 7% inflation in 2022, right? So, well, think of it this way: the Federal Reserve is targeting average inflation. So if we get 7% inflation in 2021, but then 2022 and 2023 are all even, or all zero, then that's 7 divided by 3, and they're actually on target, right? I think inflation will reduce if the supply chain issues somehow fix, right? But I think one of the things going on in the markets right now is that they're concerned that the supply issues are about to get worse because China is locking down and stuff, right? Yeah, if they wanted to average 2%, 2021 closed at 7%. How many years would you need now at 0 to average 2%? 2 years. So it really comes down to, okay, because this is kind of the big question, right? Because if it ends up being 5% in 2022, then they really have a big problem, don't they? And I don't know how to predict that sort of a thing. I mean, I knew that we were going to get more inflation than the market was expecting in 2021, and I played that accordingly. But from here on out, I'm not really sure. With truck driver mandated to have vaccines, you might see major food inflation ahead of it's happening here in Canada. Oh, I forgot about that. Yeah. I know what you're talking about. There's so many things, and I tell you what. So here in Utah, the local newspaper was basically promoting that anybody who's not vaccinated should be put in a camp, an unvaccinated camp. And I tell you what, man, if they actually did that here in Utah, it would be like riots. I mean, it wouldn't be riots. It would be like revolution. People in Utah would not put up with that. But there are other countries where they're like in Australia, they're literally already doing that. They're literally already doing that. So, but I'm actually for the US, I'm not so concerned about lockdowns and so on and so forth because it's really starting to hurt Democrats. And many of these municipalities that were extremely cautious are backing off now because it's hurting them politically. So you would need to analyze how wrong the CPI is measuring inflation. Well, you could be okay. It's a complicated issue, right? But okay, I one of the things that people typically say that really bothers me is saying that the way they're measuring inflation is false. That really bothers me, to be honest with you. Um, it's not that it's like wrong per se. It's just it's way more nuanced than that. Like there are reasons to do it one way or another way. I think that they have a good argument that um what your people if you buy a house, okay, if you buy a house, you're just going to be paying that for the whole loan. So uh, inflation doesn't really matter for you if you own a house. If you already own a house. You get what I'm saying? Um, but it does matter if you're renting. If you're renting and your rents go up, that's a huge hit to you, right? Then that really matters, right? So I think that there's a really good argument to use the rents instead of the housing. I think that was actually probably a good decision. Um, but then you have to get into like it gets so much more complicated than that, because then it's like, okay, well, how do we determine what the rents are? Because right now it seems like rent is going up and it's not. It's like, well, what the heck is going on there? So the measure that they're actually using to measure rents is maybe questionable, right? And then there's these other things like that, changing what index you use to index it against and stuff like that. There's a bunch of people saying, oh, they're about to change the numbers again to make them worse. And I'm like, well, but don't you need to start using more recent data to calculate this stuff? You know what I mean? So I the problem that we have here is that people think that the Federal Reserve has this magic little number that tells you exactly how much inflation is happening in the economy, right? And it just doesn't work that way, right? You're talking about the cost of goods rising, and the cost of all goods don't necessarily all rise at the same rate, right? If you're getting hyperinflation, then it's like really clear. But the picture that we're getting right now is really, really, really complicated. So I don't think I don't think that complaining about the measure is really gets you anywhere right now, right? Because hey, it's like 5-7% year over year, right? Now that seems like that might be slowing down, but let's just come back to where the real question is, right? So the real question is, what will inflation be in 2022? Yeah. There's no inflation indicator that is correct. It's not possible. None of them are calculated. Right. This is not really a thing. It's just a, huh. Well, they're smashing into 18 there again, and there's another big iceberg. And if they break through that, we could see some crazy stuff. Okay, maybe not. Maybe I'm dead wrong. They broke through it, but I'm not actually seeing them hit 17.5. You can't compare. Well, but could you ever like? I don't know. Again, there's not some magical number that tells you exactly what it is, right? There you go. Sucks that I didn't get filled on that second contract. Well, okay, but like here's okay. You have to be reasonable and honest to begin with. But like here's the thing: it doesn't matter what the CPI number comes in at necessarily. It's just a reflection of what's going on in the economy. Uh, what's going on in the economy is still going on in the economy, regardless of whether it shows up in the CPI number or not, right?
Block cell.
Whew. Okay. I just needed to be a little bit more patient. But you know what? I think that might be a good point for me to take a break here, because Somebody stopped out there. I kind of am ignoring legitimate critics about how it's being measured. Just because, again, you're trying to say that there is some sort of what is the word that I'm looking for here? You're trying to say that there is some sort of objective truth about inflation, that inflation is a certain amount, and we can objectively quantify that it's this certain number, and we should be using that number, and we're not using that number. And it doesn't work that way. It's a metric, you calculate it certain way. There's going to be arguments about how it should be calculated, right? And of course those things are going to make it be higher or lower, but that doesn't mean that they can't like change the metric if they think that it's going to make it more useful or more effective, or whatever the deal is. And what the number says is not the end all be all of everything, right? Like if inflation, for instance, housing inflation, right? The cost of new houses has gone up and then came back. That is still a thing, and you can still look at it. And there are other metrics and other economic indicators that we get out that give us that, right? So it's not like you can't know what's going on just because they changed the CPI number, right? Well, it's not really the Fed. I don't think that the Fed even makes that number, right? This is not the Fed that I'm defending here. But like here's the thing is that it's not blind faith in the Fed. Like I've criticized, right? Remember in 2018? Remember how upset I was in 2018 when I was like, "These things are really bad. Are they really going to raise rates here?" And they did it. And I said it's in my little intro at the beginning of every video when I told Powell that everybody thinks he's crazy because I thought he was crazy. It was stupid what they did in 2018. Total unforced policy mistake. Okay, but the thing that I don't think that people give them credit for is that these people basically sit in a big building all day with like 20 people on their staff that are basically all dedicated to trying to figure out what this is going to be like, right? And this notion that the supply chain bottlenecks were the primary cause of inflation and that they were going to abate is actually still the favored opinion of the markets. That, right? Maybe that's changing, but it's and then when the Federal Reserve made that change that Omicron, for instance, could be inflationary, like oh, okay, like that was a good point, right? And here's the thing, the Federal Reserve is going to raise interest rates. Like that's kind of the silly thing about this discussion, right? So what are we saying? Are you saying that they shouldn't be raising rates, or that they should be raising rates faster, or that they should have raised rates earlier? Because I can definitely be along with that, right? Like in my opinion, the Federal Reserve made a mistake. They should have been rolling off the balance sheet. They should have announced at Jackson Hole that they were going to reduce the balance sheet. That's what should have happened. At Jackson Hole, they should have announced that they were going to reduce the balance sheet. And by August, by like November, they should have been out. So that in the January meeting, they could have raised by a quarter. Right? Well, you're saying 2% is not even going to cut it, but the market is predicting that they're going to be at 3% by the end of the year, right? Or well, actually, it's not going to be 3%, right? It's going to be like 2.5. I don't know if that makes a difference. But to say that 2% is not even going to cut it, let's say So how would we quantify where the Fed is wrong, right? So if the Federal Reserve raises interest rates 4 times this year and the 10-year treasury moves to 2.25 to 2.5, and the overall inflation in 2022 outperforms that, then the Fed didn't hike fast enough, right? Is that fair enough to say? Because that's the base case that I'm working off of. If something about that is wrong, I'd sure love to know so I can adjust. Right. So then we come back to some of these numbers. What did we get? Where are we at? It was last week, right? Yeah, CPI. 0.5% times 12. Six. Well, remember you were just also laughing at retail, somebody else said inflation was not transitory. I don't think that that's necessarily accurate, though, right? So again, let me enumerate my position. My position is that price pressures from supply chains are a temporary thing that could last for quite some time, but it is not something that's going to be persistent. Like it's not we're not going to continue to have supply chain problems 10 years from now, for instance, right? Maybe we might still have them a year from now, 5 years from now, probably not, right? So, but a lot of this inflation was caused by fiscal stimulus. So that's my position, is that we provided too much fiscal stimulus. Well, probably too much monetary stimulus too. And that exacerbated the supply chain issues. And that the supply chain issues are then also extending further out than we anticipated because of subsequent waves. Now, the Omicron wave is, I hope that that this is the last wave, right? Okay. So my position wasn't that it was like, oh, it's transitory and the Federal Reserve is never going to raise rates, right? Because what I was saying was, even after you do all of that calculus, the inflation is going to be higher than they're saying it's going to be, and I want to be long rates and long materials. And that's how my portfolio has been balanced for the past like year, and it worked out. So I wouldn't say that it was accurate for me to say that right is again, it's more nuanced than that, right? So at the current time, though, the thing that I'm saying is it seems to me like for interest rate rises, like what the market is pricing in right now, seems pretty appropriate. If one of those rates ended up being a 50 basis point raise, that would certainly be a change in my expectations. Okay, so what Deutsche Bank is saying here is well beyond anything that I ever imagined. Okay, for starters. Second of all, I'm concerned that the growth is going to be not as good as they're thinking. all of the stuff that I'm seeing right now, it kind of suggests that we're going to get a slowdown here in the second quarter. And without the without the fiscal stimulus to pump things up, the stock market could get ugly here. And raising interest rates, especially like a 50 basis point rise during that kind of a situation, that seems kind of problematic to me. That could create deflation. So at the moment, while I think that like the 4 rate increases that the market is pricing in sounds appropriate, I'm more concerned that they're going to have to lower their expectations rather than raise them in terms of where the rates go from here. I think that the risk right now is more on a slowdown than it is on hyperinflation. They correctly, but again, the problem wasn't that. I think you're also kind of misrepresenting what the questions were at the time, right? The question wasn't our supply. Well, okay, obviously, I get why everybody's focused on it. I'm not saying that needs to raise more. They are not doing because they're dumb. They don't do it because they know. No, I don't think that that's the case. Like this, I think that the Federal Reserve is pretty smart, and that they try and position themselves to give them the most flexibility to fulfill their mandates. So the place where they made the mistake was not in saying that inflation would be transitory. Obviously, they were wrong about that. Of course, okay? But I don't think that that's what really screwed them up. I think what really screwed them up was when the Delta variant came in and they decided to start getting super easy again, right? When Delta variant was, going on over the summer and was already peaking, the Federal Reserve should have started reducing the balance sheet then so that they could start raising interest rates. They kind of put themselves in this position where everybody thought they were just going to be easy for the rest of time, right? And now they're too slow. Like the whole supply chain problem, right? If they had started running down the balance sheet in August when they should have, then they still would have been wrong about the supply chain inflation being transitory, but they would have been in a better position to deal with it. Right? But because they want to run off the quantitative easing before they raise rates, they're like, now they're like 6 months behind. That's where I think that they really made the mistake. It's like they're really good at seeing what the economic conditions are and everything, but everything that they do has to be reactive, and it seems like as of late that they've just been too slow. Supply chain fix 2023, 2024. There are a lot of companies that are not going to make it. That's too far for me to see. No, so that one, I that's the one that drives me crazy the most. We have to consider that the Fed can't raise rates that much with debt being at current levels. That is why they won't do it. That is why. So it's not their problem. It's not their problem. Their mandate is maximum price stability and employment. So if we've got maximum employment and inflation is getting out of hand, they're going to raise rates. And if that screws the government up, then so be it. But more so than that, the amount of money that we have to spend on servicing the debt, for like every 1% increase that happens, right, is trivial. It's trivial compared to the amount of debt that we're taking on every year purely because of the budget deficit, right? The budget deficit is like 10 times higher than what a 1% increase in interest rates would cost the government. Okay. So that is a trivial point. And I see like that repeated online so much. I'm telling you, it's not a factor. It's not a factor. Now, can the stock market handle that high of a rising interest rate? And if they raise interest rates too high, could it create some deflation? That's certainly a possibility. That's certainly a possibility. And I do think that when you get to certain levels like 2.25 and 2.5, there could be some problems. But if we don't get the slowdown, and that's kind of the thing where I think it gets kind of weird, is that like if it seems to me like the market is kind of saying that the slowdown doesn't matter, that like the economy is still going to continue to be strong and that the Federal Reserve is going to need to continue to raise interest rates, right? Like the market, if it was going to cause a recession, then the interest rates wouldn't be doing what they're doing right now, right? So it kind of suggests that the Federal Reserve is going to have to raise things, and that the 2-year is going to get to 2.5, and that it will cause a lot of carnage in markets, but it won't necessarily cause deflation or a recession. That's kind of seems what the market is saying right now. Yeah. You say it's not their problem as if they were truly, but they are. So if we were getting 10% inflation year over year, and Joe Biden was trying to pull a Rogan and saying, no, you've got to keep the interest rates low at 0, Powell would say, go pound sand, 100%. What's going on here is kind of a combination of, one, the Federal Reserve realizing that pandemics, that further waves of the pandemic were actually creating more inflation and not deflation. That was the first one. That was like the big change. When the Federal Reserve realized that, they changed, right? And then later, the White House was like, oh, inflation is a big deal. So now it's like, well, we want to be nice to you. We want to have a good relationship. Obviously, it's to the Federal Reserve's advantage if they can have a good relationship with the White House. But if the White House wants to do something crazy, they're not going to go along with it. It just happens to be right now that their interests are aligned. Mm-hmm. Is completely out of their control. Just wait and see. That is why we have crises. Well, that is true to some extent. A lot of people say that the Federal Reserve creates recessions. And Federal Reserve actions do tend to precede recessions, but they're always doing something. So you're always going to be able to blame something that they did, on the recession. But they do very much raise interest rates to slow the economy down intentionally. Because the idea is that you will get declines. I don't think that they want to create recessions. I think they want to avoid recessions, but you will see declines, and then, but the declines will be less, right? You gotta realize that before the Federal Reserve came along, that it was like a 2008 style crisis every 5 years. Okay. Nowadays, we've definitely had a lot of crises since 2008. That's one of the things that I think is so funny, is that everybody thinks that it was like 2008 and then the next big crisis was coronavirus, but that's not actually the case. There was the Euro crisis, happened twice, and then Like there was like 3 or 4 really big declines in there. There was the liquidity crunch, there was the 2018 Fed policy mistake, right? And those all led to declines in the market, but in the end they weren't all that big of a deal, right? And so the idea is, yeah, there will be declines, but that the longer run volatility will be less. And that has been the case since the Federal Reserve has been instituted, and they figured out how to use it correctly, because they totally screwed up the Great Depression, right? But since that time, markets have been more stable and less volatile than they were in the 1800s. Mhm. And I don't know. I'm kind of interested to know though, like what Lucas thinks, how many rate increases we think we should have. Because on one hand, he's saying the Federal Reserve needs to raise rates and they're not going to be able to do it fast enough. But then on the other hand, he's saying that they can't raise the rates because of the thing. So what are they going to do? Or do you think that they're going to raise it or not? Or what is your forecast for both the number of for the federal funds rate at the end of 2022 and the 10-year rate as a consequence of that? FTH says at the most 2. So are you saying, FTH, you think that they're going to raise rates twice and then they're going to stop? Because that's not unreasonable. There's a lot of support for that in the markets right now. So you're saying that they won't raise rates. So how many do you think that they'll do? Are you with FTH? You think that they're going to do 2 and then stop? Because then I don't think that you're too far off from what I think right now. I don't think that they're going to do 2 and stop. I think that they're going to do 4. But I think that there's a greater risk of them doing 2 and then having to stop than there is of them having to raise like 5 times or do a double increase or something like that. 2% this year, 1% maybe next year. So that means that would be 4 for the federal funds rate, right? That would be 4 rate increases. You cannot raise interest rates a lot because then there is no demand for money, then it is too expensive. Well, from that perspective, um, there is an argument that there are parts of the economy that need the money, right? Not everybody recovered from this in the same way, and there's definitely like some of these, like a big tech company, then they took care of it. But there are some like small businesses that are still being shut down, and they're going to get screwed by the higher interest rates, aren't they? And this is where I say I really think that what we have learned about the inelastic theory of markets is really, really important. Not just because of what it teaches us about market inefficiency, but because it has direct implications for monetary policy. Because if markets are inelastic, then the amount of money that the Federal Reserve and the fiscal stimulus that got put into the economy is going to be too much. Because once you know that putting $1 in, it actually increases the market cap of the stock market 5 times that. That means you're going to put 5 times more stimulus in than you need, right? And they've shown this clearly. This is like a piece of research that could have a huge impact on how much stimulus they do in the future, right? Because then we could have done something where we could have, yeah, we would do stimulus still, but it wouldn't have been as much, and the markets wouldn't have gone all nuts so crazy and all that sort of stuff, and we would have less inflation, and we could be ahead, and then we could go back into Goldilocks land like it was after 2008 to 2020, right? Where you know you don't have to mess with the interest rates all too much because there's um longer term generational deflationary pressures on things, and that ends up being good for business, and it just continues on all nice hunky dory. But instead we overdid it. Okay, you need to ask yourself, what would happen if they are in the middle of these rate hikes and a new variant strikes or the economy slows down? What do you think what they will do? Okay, so it very much depends, right? So if a new variant strikes like Omicron, I think that it's probably like no big deal. Okay. And if anything in that situation, that again, the risk is that increases inflation. So I think in that situation, the Federal Reserve still raises. Okay. And that is why I think that the market is saying here, like the rates are still rising, even though the S&P 500 is falling here and all that sort of stuff. Because they're saying, well, this is the Omicron variant starting to show up in the data, and the Federal Reserve is still going to tighten regardless of that. Okay. So that's the first, kind of calculation that we have to make, right? So if it's just now, if it was something else, like if it was a variant like that was more similar to Delta, that was more resistant, so that nobody had a resistance to it, and it was still very, very deadly, then that could cause deflationary pressure, and then maybe they would have to back off, right? Okay. Number two, this slowdown that we're getting. So if this is just a slowdown, then I'm not too sure that the Federal Reserve really has to worry about it too much. Like, we'll raise rates in March, and then next time you raise rates is like, you do like June, September, December, something like that, right? That gives them enough time. Probably by the time that June comes along, that slowdown is kind of past, right? So they still raise rates. But we don't necessarily have to worry about that one because of the timing of the meetings and stuff like that, right? But if by June that has pushed us into recessionary territory, then they would back off again, right? Okay, their whole viewpoint regarding COVID was stimulus and boosting the economy comes first, inflation comes second. Yes and no. I don't think that they say inflation comes second. I think that they say that this is a deflationary pressure, and so you're not going to get inflation. I think that's what they were thinking when they did the stimulus. This whole like supply chains creating like raising prices and all that sort of stuff. I don't think that was anywhere on their radar when they first started being easy in 2020. They just ignored inflation as long as they could, which is the same thing. Yeah. Well, they definitely did. I mean, I bet on inflation being higher and was rewarded for it in October, from October until now. Clearly, I didn't take advantage of it nearly as hard as I should have, huh? I mean, there's a reason why I still have this short. Even though I'm not like adding contracts and stuff, I guess I should have kept all 3 contracts short. Um, but I don't think that they ignored it. I think that they made a calculation about what was causing the inflation and how long that was going to persist for that ended up being wrong, right? It's super interesting because monetary policy is such a complicated thing. Everybody on the internet wants to, and I'm not saying you, Lucas, because you seem to understand what's going on, and you, it's in fact from talking to you this morning, Lucas, it seems to me like your economic outlook and understanding of what happened and everything is the same as mine. It's just that you are favoring criticizing the Federal Reserve for being a system that causes problems. Are you on a live? I did take some of those trades live, and overall it was negative, but it was about $20, so I lost. It's funny to me that monetary policy is so complicated. Yet, well, I don't think that Reddit got it right, but there was a lot of people on the internet that got it right. Yes, yes, there was a lot of people on the internet that got it right. Every one of those CPI reports between March and and October, I was looking for it to exceed expectations and was trying to trade it, wasn't I? Yeah. See, that's the real difference between you and me here, and I'm going to make my here's my larger argument, okay? And because there's two things that I'm trying to do here with this channel. One thing is I'm trying to help you guys understand the true nature of markets to try and improve the chances of retail traders making money. I know that with my best efforts that most people are still going to lose money, but I do think that some of the things that we're teaching you guys about market microstructure and economics are going to give you a leg up and are going to really at least help you get back onto par with some of the professionals to some extent, okay? Um, so there's that one. But then the second one is to understand the societal consequences of these things that we're learning. So the big thing that we know is that markets are not efficient. They're not informationally efficient. They're quite statistically efficient, but they're not fundamentally efficient. All known information out there is not accurately reflected in current stock prices, okay? Contrary to common belief. We have built up this mythos. We've built up this mythos over the last, since the 60s that the market is efficient, right? That's what they told us when we were pushing up, when we were fighting against communism, is that because markets are efficient, that's how we defeated communism. And again, it's more nuanced than that. Capitalism is really good at moving investment money around, right? And so if something is not a profitable venture, then you don't put money into it and the money goes elsewhere. And that's what, you know, capital markets are so very, very good at. Okay. But in terms of correctly reflecting all available information, so that like we can always make the correct decisions, it is not very good at that. It is not very efficient in that respect at all, right? So there are many people out there, libertarians essentially, that think that if we just were hands off on the market, that everything would be fine. And that is not true. And we know that not only because of the empirical research that we have on these sorts of things, but from history, that we know that when they just let markets do whatever they wanted, it had very dire consequences. Okay. The reality is that the markets are going to, from time to time, do dumb things, and that you're going to have to intervene to some extent, right? So the question is, what kind of interventions are appropriate, and to what degree, and so forth, right? Like, I think that some degree of fiscal and monetary stimulus was appropriate after the coronavirus crisis, or we call it, whatever. But they did too much, right? They did too much. They shouldn't, the Federal Reserve probably shouldn't be out buying corporate bonds on the open market. That just is like not okay to me. I'm not okay with that. I think that that's too far, right? And yes, that means that you should have a Federal Reserve. Having a institution that can adjust the monetary policy and adjust interest rates to account for current market conditions is a good and useful thing. And the history of the Federal Reserve shows that it was better than when we just let things run amok. But does the Federal Reserve get it right every time? No, they're always going to make mistakes. And that's why it's really important for us to try and be as nuanced about what they're doing as possible, right? Because, uh, there was so many things that were going into Fed policy last year, right? Because there wasn't just like there was this concern about inflation and this whole question about whether that inflation was really going to persist or not, but then there was also the concerns about how big of an effect the Delta variant would have on the markets overall. And, we were just coming off of this absolute mania that happened in the beginning of 2021 with GameStop and all of that. That plays into it as well, right? So the Federal Reserve has to do a couple of things. And I think in this instance that they said, well, because we don't know how damaging Delta variant is going to be, we can kind of hold off. And so they held off on it. And then at the same time, they were wrong about the inflation being transitory. So now they're behind, right? I think it's really important that we understand that that's what happens, so that next time around this happens, we can, we can think about it. I think that my take after all of this is that when you're participating in QE, you should end it as soon as you can. You should err on the side of removing the QE stimulus too fast, I think. Because if you don't, it can trap you, right? Like you could raise or lower interest rates anytime you want. The Federal Reserve came in and lowered interest rates in emergency meetings before, right? And you could do an emergency meeting to raise it too if you needed to. Interest rates are more flexible than QE, seems to me. Libertarians don't argue markets are not going to do dumb things. They argue that whatever results from that is going to be less profitable. Well, I just don't agree with that. I have to say, if for instance interest rates were controlled by the market, we'd be in a depression right now. Just straight up, we'd be in a depression right now. The moment you use QE, you already find yourself in the trap. If the economy grows thanks to QE, you can't remove it ever. You'll need a bigger and bigger doses of it. Well, I mean, we have been able to roll off QE, but then it was like as soon as you're done rolling it off, then it takes off again, and then you have to take it back on. So I don't know if that proves that you can never get out of it, but it is. I think we've been too cavalier with QE for sure. I don't think that it's like a tool that we should never use, because you do have to think about market liquidity and stuff. But they definitely took it too far this last time. Yeah, but so for instance, with the last round of quantitative easing, this is the thing that's so frustrating about coronavirus, right? Was that it prevented us from learning the key question, right? Because the key question was, okay, as soon as you completely roll off the balance sheet and start raising rates, does that create a recession? And then it creates a situation where you can never get rid of the monetary stimulus. And we were in that position, right? We started doing that. We went a little too fast in 2018 and things, December 2018, 2019. So 2019 was kind of a year of recovery. And then at the beginning of 2020, things were looking pretty good. So based on that trajectory, although the interest rates were really high, were really low, it kind of all suggested that like it was working out, or at least I think there was some reason to believe that the Federal Reserve was going to be right. But then we never got to find out because coronavirus came in and screwed that all. If coronavirus hadn't happened and there wasn't some sort of natural disaster to hurt the economy over the past 2 years, where would we be at? Would they have still ended up crashing the economy and having to do QE again? Because that's what I think you're arguing, right? But I guess we'll never know. And now we're going into a completely different regime where it kind of looks like, I think that there might be some inflationary pressures for some time. There's a risk of there being some inflationary pressures for some time. Kind of depends on a couple of different things, right? So we could go back to that low inflation environment very easily, and that's probably the base case. But there are some cases where it might be a little more sticky. Good talk. But yes, I think overall the Federal Reserve is a good and necessary institution, even though they're almost always going to screw it up to some extent. There's always going to be something that they're going to be wrong about or that they could have done better. It's just like any trading, right? You never make perfect trades. Okay, guys. Oh yeah. Well, there was, that goes back to, there has been so many more crises since 2008, between 2008 and 2020 than what people acknowledge. Okay, hey, I better get going though. So we can continue this tomorrow. In the meantime, stay profitable.